Welcome. Today we're diving into a topic that's on the minds of millions of Americans: Social Security checks. If you're planning for retirement, you might be counting on a certain amount each month. But what if your Social Security check ends up being smaller than you expect? In this video, we'll explore the reasons why your benefit might not match your expectations and what you can do to prepare. Let's start by understanding how Social Security works and why it's so important for your financial future. Social Security benefits are calculated based on your lifetime earnings, specifically your highest 35 years of income. The Social Security Administration uses a formula that adjusts your past earnings for inflation and then averages them out. This average is used to determine your primary insurance amount, or PIA, which is the base for your monthly benefit. However, if you have years with low or no earnings, those zeros can bring down your average, resulting in a smaller check than you might expect. One major factor that can shrink your Social Security check is claiming benefits before your full retirement age. While you can start receiving Social Security as early as age 62, doing so will permanently reduce your monthly benefit. For each month you claim early, your check is reduced by a fraction of a percent, adding up to a significant cut if you claim several years early. This is a common reason why people receive less than they anticipated. Full retirement age, or FRA, is the age at which you're entitled to your full Social Security benefit. For most people today, FRA is between 66 and 67, depending on your birth year. If you claim before this age, your benefit is reduced. If you wait until after FRA, your benefit actually increases. Knowing your FRA is crucial for maximizing your Social Security income and avoiding surprises. If you delay claiming Social Security past your full retirement age, you can earn delayed retirement credits. These credits increase your benefit by a certain percentage for each year you wait up to age 70. This means your monthly check could be significantly larger if you're able to wait. However, not everyone can afford to delay, so it's important to weigh your options carefully. If you claim Social Security before your full retirement age and continue to work, your benefits may be temporarily reduced due to the earnings test. If you earn more than a certain threshold, the Social Security Administration withholds part of your benefit. Once you reach full retirement age, your benefit is recalculated and you get credit for the months when benefits were withheld. Still, this can make your check smaller in the short term. Many people are surprised to learn that their Social Security benefits may be taxable. If your combined income exceeds certain limits, up to 85% of your benefit could be subject to federal income tax. This means the amount you actually receive after taxes could be less than you expected. State taxes may also apply, depending on where you live. If you're enrolled in Medicare Part B, the premium is often deducted directly from your Social Security check. This can make your monthly payment smaller than the amount you see on your benefit statement. Medicare premiums can also increase over time, further reducing your net Social Security income. Social Security benefits are adjusted annually for inflation through cost of living adjustments, or COLAs. While these increases help maintain your purchasing power, they may not always keep up with the actual rise in living expenses, especially for healthcare and housing. As a result, your check might feel smaller over time, even if the dollar amount goes up. If you worked in a job not covered by Social Security, such as certain government positions, the Windfall Elimination Provision, or WEP, may reduce your benefit. WEP affects people who receive a pension from non-covered work and also qualify for Social Security. The formula used to calculate your benefit is adjusted, often resulting in a smaller check. Another rule that can shrink your Social Security check is the Government Pension Offset, or GPO. This provision affects spouses, widows, and widowers who receive a government pension from work not covered by Social Security. The GPO can reduce or even eliminate Social Security spousal or survivor benefits, leaving you with less than expected. Divorce can also impact your Social Security benefits. If you were married for at least 10 years, you may be eligible for spousal benefits based on your ex-spouse's record. However, remarriage or other factors can affect your eligibility and the amount you receive. It's important to understand how marital status changes can influence your Social Security income. Survivor benefits are available to spouses and dependents of deceased workers. However, the amount can be reduced if the survivor claims benefits before reaching full retirement age. Additionally, if the survivor is working, the earnings test may apply, further reducing the benefit. Understanding these rules is key to planning for your family's financial security. Sometimes, the Social Security Administration may determine that you've been overpaid. This can happen due to reporting errors or changes in your circumstances. If this occurs, your future checks may be reduced until the overpayment is repaid. It's important to keep your information up to date and respond promptly to any notices from Social Security. Certain debts, such as unpaid federal taxes, child support, or student loans, can lead to garnishments from your Social Security check. The government can withhold a portion of your benefit to pay these debts, resulting in a smaller monthly payment. Understanding which debts can affect your Social Security is crucial for financial planning. Even with cost of living adjustments, inflation can erode the purchasing power of your Social Security check. Prices for essentials like food, housing, and healthcare often rise faster than benefits. Over time, this means your check may not stretch as far as you hoped, making it important to budget carefully and seek other sources of income. Your Social Security benefit is based on your earnings record. If there are errors or missing years in your record, your benefit could be lower than it should be. It's important to regularly check your Social Security statement and report any discrepancies to ensure you receive the correct amount. If you're self-employed, you're responsible for paying both the employer and employee portions of Social Security taxes. Failing to report all your income or pay the correct amount can result in a lower benefit. Make sure to keep accurate records and pay your taxes to maximize your future Social Security checks. Working part-time during retirement can affect your Social Security check if you claim before full retirement age. The earnings test applies, and if you earn above the limit, your benefit may be temporarily reduced. However, after you reach full retirement age, you can work as much as you want without reducing your benefit. If you receive a pension from work not covered by Social Security, such as a government or foreign pension, your Social Security benefit may be reduced. The windfall elimination provision and government pension offset are two rules that can lower your check. It's important to understand how your pension interacts with Social Security. Immigrants who have worked and paid Social Security taxes in the U.S. may qualify for benefits. However, if you haven't worked enough years or have gaps in your record, your benefit may be lower. Some international agreements can help, but it's important to check your eligibility and understand the rules that apply to you. If you receive Social Security Disability Insurance, SSDI, your benefit is based on your work history and earnings. If you later switch to retirement benefits, the amount may not increase. In some cases, working while on disability can reduce your benefit or make you ineligible, so it's important to understand the rules. Children of retired, disabled, or deceased workers may be eligible for Social Security benefits. However, there are limits on the total amount a family can receive. If the total exceeds the family maximum, each person's benefit is reduced proportionally, resulting in smaller checks for everyone. Divorced individuals may be eligible for Social Security benefits based on their ex-spouse's record if the marriage lasted at least 10 years. However, if you remarry, you may lose eligibility for these benefits. Understanding these rules can help you plan for your retirement income. Remarrying can impact your Social Security benefits, especially if you're receiving spousal or survivor benefits based on a previous marriage. In many cases, remarriage will end your eligibility for these benefits. It's important to understand how changes in marital status can affect your Social Security income. If you owe child support, your Social Security check can be garnished to pay these obligations. The government can withhold a portion of your benefit, reducing your monthly payment. It's important to stay current on child support to avoid unexpected reductions in your Social Security income. Unpaid federal student loans can also lead to garnishment of your Social Security check. The government can withhold a portion of your benefit to repay these debts, which can make your monthly check smaller. It's important to address student loan debt before retirement if possible. If you owe back federal taxes, the IRS can garnish your Social Security check to collect the debt. This can significantly reduce your monthly benefit. To avoid this, it's important to resolve any outstanding tax issues before you start receiving Social Security. While Social Security benefits are generally protected from creditors in bankruptcy, there are exceptions. If your benefits are commingled with other funds or not, kept in a separate account, they may be at risk. It's important to keep your Social Security payments separate and consult a financial advisor if you're facing bankruptcy. Fraud or identity theft can result in your Social Security benefits being stolen or misdirected. If you suspect fraud, contact the Social Security Administration immediately. Protect your personal information and monitor your account to ensure you receive the benefits you're entitled to. If you receive more Social Security than you're entitled to, the SSA will require repayment. This can happen due to reporting errors or changes in your circumstances. Your future checks may be reduced until the overpayment is repaid, so it's important to keep your information accurate and respond to any notices. Your immigration status can affect your eligibility for Social Security benefits. If you're not a U.S. citizen or permanent resident, you may not qualify for benefits, or your benefit may be reduced. It's important to understand the rules that apply to your situation and keep your status up to date. Living outside the United States can affect your Social Security benefits. Some countries have agreements with the U.S. that allow payments to continue, while others do not. If you plan to retire abroad, check the rules to ensure you'll still receive your benefits. When a Social Security recipient dies, a one-time death benefit may be paid to a surviving spouse or child. Ongoing benefits may also be available to survivors, but the amount can be reduced depending on when they claim and their own work history. Understanding these rules can help families plan for the future. Spouses may be eligible for Social Security benefits based on their partner's work record. However, if you claim before your full retirement age, your spousal benefit will be reduced. It's important to understand the rules and timing to maximize your benefit. Survivor benefits are available to spouses and dependents of deceased workers. The amount depends on the worker's earnings and when the survivor claims. Claiming early reduces the benefit, while waiting until full retirement age provides a larger check. Planning ahead can help maximize these benefits. There's a limit to the total amount a family can receive from Social Security based on one worker's record. If the total exceeds the maximum, each person's benefit is reduced proportionally. This can result in smaller checks for everyone in the family, so it's important to be aware of the family maximum rules. Cost of living adjustments, or COLAs, are designed to help Social Security benefits keep up with inflation. However, the formula used may not fully reflect the rising costs of essentials like healthcare and housing. Over time, this can make your check feel smaller, even if the dollar amount increases. Medicare Part B and Part D premiums are often deducted directly from your Social Security check. If premiums increase, your net benefit may decrease, even if your gross benefit goes up. It's important to factor in healthcare costs when planning your retirement income. Inflation can erode the value of your Social Security check over time. Even with annual adjustments, the rising cost of living may outpace benefit increases. This makes it important to have other sources of retirement income and to budget carefully. Delaying your Social Security claim past full retirement age can increase your benefit through delayed retirement credits. For each year you wait, your check grows up to age 70. This strategy isn't right for everyone, but it can help maximize your monthly income if you're able to wait. Claiming Social Security before your full retirement age results in a permanently reduced benefit. The earlier you claim, the bigger the reduction. It's important to weigh the pros and cons of early claiming and consider your health, finances, and family situation before making a decision. Your life expectancy plays a big role in deciding when to claim Social Security. If you expect to live a long life, waiting to claim can result in a higher total benefit. However, if you need the money sooner, early claiming may make sense. It's a personal decision that depends on your health and financial needs. Planning for retirement means understanding how Social Security fits into your overall financial picture. Consider your other sources of income, expenses, and long-term goals. Working with a financial advisor can help you make the most of your benefits and avoid surprises. In summary, there are many reasons why your Social Security check might be smaller than you expect. From early claiming and taxes to Medicare premiums and inflation, it's important to understand the rules and plan ahead. By staying informed and proactive, you can make the most of your Social Security benefits and enjoy a more secure retirement.